Hey everyone, welcome to Trade Building. So we're going to run through how to really utilize the 4 hour, marking structural highs and lows, swing points, liquidity, how to align and utilize the 15-minute for entry after trade directional bias on the 4 hour, and really how to mold things together and really nail this down. So we'll start off with just again summarizing what the power of two is. We have created this very simple and mechanical trade system where it's very black and white. Either a trade sets up or it doesn't, or if the trade meets all the criteria, it either wins or it loses. We have higher time frame analysis being the 4 hour, being the key driver, and then the 15-minute being the entry model, which is slow enough so that you can still be at work and not stress about fear of missing out. But it moves fast enough so that you're not waiting weeks and weeks for an entry to set up. Now, people do often get caught up on the lower time frame. So if they are at home all the time and they're essentially quote unquote a full-time trader, they can get lost in the lower time frame noise. And also you've got those where you may be working full-time and it's already challenging enough if you don't have the right strategy to align the 15-minute with the 4 hour, but then adding in the 5 minute and the 1 minute and the 5 seconds, if you even want to go at that extreme, we've all been there, how to really navigate and follow that and align all the time frames with, essentially spinning so many plates while you're distracted because you're on the road or you're in business meetings. It's just not sustainable, right? So we're really filtering out all the lower time frame noise by using the 4 hour for analysis and simply the 15-minute for entries. I've covered 2 sessions already in the presentation, but here they are again. So UK times here, we've got 8 a.m. till 10 a.m. and then we have a break until we come back for New York, 1:30 till 3:30 p.m. UK time. Now again, if you're only able to trade one of these sessions, that's fine. There is opportunity every week. If you can trade both, that's fine. You don't have to, there's no rules on this. Make trading work for you, not the other way around, remember. So what we're going to cover next is the basics of it, the criteria. We're going to cover technicals on the 4 hour structure and range, technicals on 4 hour directional bias, technicals on 15-minute structure, and there are some examples, live chart examples for each of them as well. So starting off with the basics. So if you look at the left, with the 4 hour, we're looking at directional bias, and one of the tools that we use here is a concept we've called follow through or no follow through. And the acronyms are FT or NFT. So what's the difference between the two? Like you can see in the example, for confirmed follow through, we want 2 candle closes below the high or low, the previous structural high or low on that time frame. If we get 1 candle body close, like the second example on the left, followed by a closed bullish candle in this scenario, then that stage is not a confirmed follow through. That is actually a confirmed no follow through, which is the early signs of a change of direction or bias. So next up is the 4 hour structure and range. Now, what we like to do here is we like to use the fractals indicator on the 4 hour to help with structural points. And we basically use the horizontal ray bar and follow these structural points. So we know where the high and the lows, we know where premium and discount is, and where is the prime time to be buying and the prime time to be selling. We can also follow this in conjunction with the follow through rule and the no follow through rule and keep moving our horizontal ray lines to make sure that that's the range that we're playing and this is the directional bias for the day. So when we have follow through, for example, to the downside, we want to wait for it to ideally come back into premium of that 4 hour range before then looking for continuation sells. We'll go over some examples in a moment. And when we can see price struggling to follow through, that's where we call it an FT or no follow through. So it either wicks the low or it may close one body close bearish followed by a bullish like on the previous slides where we then trade in the opposite direction. So putting all this into perspective and building it together, the criteria is as follows. So firstly, we want to plot out the most recent 4 hour range using the horizontal ray lines and the fractals. Where was the most recent no follow through or follow through? So go back and watch this video a couple of times to make sure you understand what the difference between the two is. And this will give us the intraday bias. And very rarely does it change within the same day. Then you got to plot out the most recent 15-minute range using your range box. And this is a good indication of just basically following order flow for that day or that session. And then we want to wait for a fractal high or low. It can be the outside of that 15-minute range. So the range high or low is what I mean. Or it can be an internal fractal as well. As long as you are pro 4-hour structure and 4-hour direction, you can take those internal fractal sweeps. Right, okay, so we've got Euro, US dollar on a 4-hour chart here. What we're going to do is do an exercise where I run through marking out for directional bias, trade building, which is what the 4-hour is for. We're not going to jump to the 15-minute when we're trade building. We're going to mark our range highs and lows following current price action and the most recent fractal high or low. And we're going to identify points where we get either confirmed follow through or no follow through, which then gives us our directional bias for trades. So if we just look at this random piece of price action here and use our horizontal ray for this lowest point because we have broken a fractal low, trail it back to the most recent fractal high, which is here. And then we can identify what's happened in between. So yeah, like I say, we had a fractal low here. We mark a line and we want to confirm whether we've had follow through or no follow through or neither. So for follow through, what do we need? We need 2 body closes beyond the fractal. So we have 1, 2, nice and easy, confirmed follow through. So what is the directional bias for this? It's sells, right? And where are we going to be looking for sells? Because it's bearish, we're only looking for sells in premium. So we want price to pull back into premium before doing anything. Once it gets into premium, we can then look on the 15-minute for entries for sells. So let's play this forward. We're going to go through a bit of price action on the 4-hour and see what happens. Does price come into premium or does it continue lower? So what have we done here? Price has breached the low. So we'll move the range low. We're also going to move the premium versus discount. Looking back, has the fractal high moved? Hasn't. We haven't had a new one print. But what we have done is we have wicked this fractal low, which is a confirmed NFT. If it's a body close, we want to wait for another body close to confirm whether that's follow through or no follow through. But if it just wicks it, that is enough to say we have no follow through. We can look for buys. So we delete the most recent follow through that's no longer valid. We're now looking for buys in discount, which we're in. We've had no follow through. And that's our directional bias. So we'd be looking to buy like this. So let's play it forward and see what happens. We get higher prices. Awesome. So at this point, you might be thinking, well, is the 4-hour bearish? Can we sell in premium? No. So following our current rules, we use the most recent follow through or no follow through for our directional bias. Seeing as we've had an NFT to the downside, our directional bias was longs, but only buying in discount. We're no longer buying in premium, but also the last piece of information we had was no follow through to the downside, meaning price is going higher. So we're not trading into premium to then sell back into discount again, okay? So what we're doing now is basically sat on our hands, price is sat in premium, and we're waiting for either the high to be breached or the low to be breached. That's it. So let's play forward and see what happens next. Another thing just to touch on here as well, which is something that I was teaching before because I've done heavy testing on this, but don't want to confuse anyone with this, is internal 4-hour NFTs. So we're no longer looking at this, or I'm no longer looking at this for now. It might be something we can add later on, but to keep things simple, we're not looking for any internal sweeps. We have still got our 4-hour range high and 4-hour range low, and we want either one of these to be breached, okay? So just to clear that up. So now we have a high breach. What we're going to do is move our range high. And looking back, we have not had a new fractal low form here. So this is still our new fractal low, or our current fractal low. We're going to move our range though. Delete this NFT just to keep the charts clean. And we're going to mark a line from where the high was. And we can see here that we've got unconfirmed follow through and no follow through. Why? Because it's just one candle, but it's one candle close. To get a confirmed follow through, we want a second body close above here. For a no follow through, we now want a bearish candle right after this. So what do we get? We get a bearish candle right after. So we have confirmed now, moving this higher, this is a no follow through. And we can see that now we now have new fractal low. So moving this up, this is now our range. So directional bias at that point is sells from premium. It's quite a tight range, but that's what the directional bias is because of the no follow through to the upside. Directional bias is bearish. So let's play price forward. Like I said, I'm looking at the 15-minute for this. We're sticking to the 4-hour for trade building. What do we happen now? So this candle goes straight through and breaches this low, this fractal low. So again, we're moving our 4-hour low and the premium versus discount tool. And we're identifying with a line where that low was. What do we have? It's not a wick, so it's not an NFT, it's unconfirmed. We want a bearish candle next to confirm NFT to the downside for buys, or we want a second bearish candle to confirm follow through. And what do we get? We get a bearish close. So we'll move our range down. We can confirm this is a NFT, remove that most recent one. This is our new range, and we are looking for buys in discount. That's our directional bias. 4 hours now bullish. Yeah. What happens next? Price goes higher. Okay, so we've breached the highs now. Same exercise as before. We are moving our range high and using a line here from the most recent or the previous high. What have we got? We've got a body close or a wick. This is a wick. So straight away we can assume that this is a no follow through. So we can right away look for sells in the 15-minute. As long as we get the 15-minute setup, and it sets up during a kill zone of course, and that sets up in premium. If it comes below or into discount, we will not be looking to trade that. But we'll see what happens next. So price just comes higher. So we probably don't get a 15-minute setup at that point. So we can move our range high and the premium versus discount higher. Now, at this stage, we have unconfirmed follow through and unconfirmed no follow through. Why? Let's delete that. Because for us to get a follow through, we want 2 body closes above this fractal. So far, we've had a wick and then 1 close. If we get a bearish candle next, that will confirm this back again as NFT. So let's see what happens. We can assume now that this is no follow through once more, and we can look to sell in premium. For our directional bias is bearish. Okay? Playing forwards. And we do get lower prices at that point. Now we're not looking at trading long out of discount. Remember what I spoke about earlier, this is in reverse. Directional bias, because of the NFT to the upside, is bearish. Okay, so we're not looking to buy in a bearish market, and at the same time we're not looking to sell in discount. So we are sat on our hands until the low is breached or the high is breached. So we wait. We're going to take first the lows or the highs. This is all internal. Okay, breaches the highs. Move our range up. We've got a new fractal low as well. Move this up. We can move our premium versus discount range as well. And let's draw a line, not to forget where the high previously was. We can identify what's price action telling us. Do we have a wick or a body close above? It's a wick, so we can assume that it's no follow through. So directional bias at that point, at that candle close, is sells. Sells into premium, 4 hours bearish. So let's see what happens next. So price goes sideways overnight. This is Asia session anyway. And just it just wicks this fractal. So we actually want to move this along. Get a new fractal low form as well. So we'll drag this up. We will remove this NFT. And as we wick, and straight away get a bearish close as well. So we have NFT to the downside again. So we're looking for sells. 4 hours still bearish. Let's play it forwards. What happens? Price dives lower. Okay, so we'll carry on this exercise for a little bit longer, moving our range down. Our high is still here. Where was our low? It was here. Let's remove this NFT at the moment. Now, we have unconfirmed follow through because it's only one candle. We want a second candle to confirm follow through. We've also not got a confirmed NFT because it didn't wick, and also we haven't got a retrace candle yet. Let's see what happens next. We get a second candle close. So we'll move our range low down and we can confirm this as a follow through. What does that mean? Similar to right at the start, we are waiting for price now to come into premium before looking for sells. Directional bias is bearish, okay? High remains the same. When it comes into premium, I do like to use a different color for my EQ, especially for when I'm looking at the 15-minute, and you can see that when price crosses, if we're looking to sell at this point, that's when we know we are selling in premium. And it likely doesn't play out. This probably, just by the look at that buy to sell wick, it was just a smaller range in the 15-minute. Just shows that price action went sideways. So it's highly likely that there was not a sell setup in there. So we've wicked the highs. We've breached the highs here. Let's move this along. I'll just remove that. Also got a new fractal low. So we'll move our range low and we'll move our premium versus discount range along with it. We'll remove that follow through. That's old news. And the most recent high was here. It's wicked it, so it's no follow through. We can assume, because it's wicked, that sells are on the cars. So what's the 4 hour? Bullish or bearish? It's bearish, yeah? What happens next? Do we get further confirmation? Yeah, we do. We could already be looking for sells at that point. Next candle wicks the high, so we move this higher, move the range higher. Our low is still intact. We've still not had follow through to the upside because our fractal is here. We've not had any close. This is just another wick. So it's still no follow through. Price action, daily bias, the bias for the day on the 4 hour is still bearish. Yeah? What happens next? We wait for the next candle close. Okay, we get one body close above. Move our range higher. Keep the low where it is. So that gives a good exercise, really. What we've done is we've covered 2 weeks, over 2 weeks of price action, 3 weeks really in terms of trading days. That should give you a really good idea on what to do with your 4 hour range high and lows, when to move them, how and when to use the premium versus discount tool, what the rules and the requirements are of what is a follow through, so 2 body closes below or above the most recent fractal, always using the most recent fractal rather than a structural point. So just to run through something, this is the most recent fractal when we're up here, right? Rather than something I've mentioned before using a structural sweep. We're going to focus on the most recent fractal. And with an NFT, if it wicks straight away like this, we can assume NFT. If we get a candle close, we want a second candle to confirm. That must be a bearish candle in a situation like this. And then moving into 15-minute structure, this is our entry time frame. So what we use again, like the 4 hour, is the fractals indicator to help with structural points and liquidity points. So what we want to do first and foremost is build that 4 hour directional bias using the structure and the ranges. And then when we have that bias for the day, we set alerts and then we wait for the pattern to play out inside our session timings only. So this is what I mean by if you're working full time, you could literally set your alerts after a 10-15 minute analysis in the morning at the charts. You're then out on the road and you've got either an iPad or a mobile phone where you can set your alerts, and you've got TradingView. And if your alert pings and you know it's during a trading session time, you can execute that on MT4 on your phone. Or if you're able to access a laptop, like a work computer, for 60 seconds, that's literally all you need. Typically, we don't see many more than one opportunity per day per pair. So again, it's very easy to manage. It's slow enough so you're not missing out on opportunity, but quick enough to suggest that we've got enough opportunity each week to capitalize on. So here is some examples of 15-minute entry following the 4-hour structural points and the trade building and the directional bias, and then coming right down to the 15-minute for entries. Okay, so the same price action. Remember how we trade build on the 4-hour? We're going to do the same exact exercise, apart from what we're going to do when we get that directional bias. We are then going to drop to the 15-minute and look for entries. So, remember what we had here? Most recent fractal low, 2 bodies closed below, so we have follow through. What are we waiting for? We're waiting for price to come into premium before selling. So the directional bias is bearish, but we must be in premium to sell. Let's play price forward, see what happens. So we get a breach of the lows. It's a wick. A wick is, we can assume, no follow through. So the directional bias has now changed and we're looking to buy in discount. So let's remove that and drop down to the 15-minute. Let's have a look here. So let's just add in our 15-minute range and then move it along. So that's the most recent low, that's the most recent high, and we're contained within this range. Now there's 2 scenarios we can use for entry on the 15-minute. What we would prefer is for the 15-minute range to be swept, and we can take that long. However, if we do get an internal fractal sweep inside session like this, we can take that. What's most important is the 4-hour trade building and that directional bias. So let's play this forward and see what we get. So, just like I've outlined there, we've just swept inside London kill zone, this 15-minute fractal low, inside our range, inside discount of the 4-hour after an NFT to the downside. We know that directional bias is bullish. And we've had a sweep. What we can do is place a buy stop above the candle. And then we'll give a few pips breathing space on this. Go for a 5-pip stop loss. And a risk to reward is always 3-to-1. Let's play this forward. What do we get? Within 45 minutes, we get a 3-to-1. Now that's a relatively small stop loss, but it's all relative to how big the candles are. Okay, I gave myself 2-pip stop loss, give or take there. Now this is something that you want to be able to, with your own testing, identify for yourself. Stop loss placement, yes, you need to give it some breathing space. If you felt more comfortable with giving it 3 or 4 pip stop loss, that's absolutely fine. But that's something that you have to come up with in your own backtesting, right? See, that would have still played out with a larger stop loss. So there's the first trade. I've also played forwards into New York where there was no entry. You can see here price came back, it did not sweep, it just mitigated and carried on. If this had swept this fractal, then I would have absolutely have been taking that. And now we're in premium pricing, coming towards the end of New York, even higher still. There's the end of the session. We're no longer looking to trade. So back to the 4-hour. and play this forward for the next day. Remember, we're not using internal NFTs. We want the high or the low to be breached. High gets breached here with a body close. Not quick. So we cannot assume yet that this is NFT. We're going to need a bearish candle close for confirming NFT to the downside, or a second bullish candle close to confirm follow through. So we're sat on our hands, we're waiting at this moment. What do we get next? Price drives higher and then closes bearish. So this is confirmed NFT, and we are looking, if our range lows up, we're looking for sells. Directional bias is bearish. Drop to the 15-minute. Do want to be selling in premium. See, price currently is in discount. And also you can see, this is overnight. This is way into the evening. This is way after New York. Reaches the low. Range low down. Move our premium versus discount down as well. We draw a line. Remove that previous NFT. It's no longer valid. And again, we want to wait because it's a close and not a wick. We want either a bullish candle close to confirm NFT to the upside for buys, or a second bearish candle close to look for further continuation to the downside. So what do we get? Get that retrace candle. So we move our lows down. We can confirm this as NFT. Directional bias is bullish. We are looking for buys and we're sat in discount. So drops the 15-minute. Where are we? This is Asia, so let's play forward until we get to London. Okay, now we're in premium, so we'd want it to push back into discount, which is unlikely to do, and we've breached the 4-hour highs during London. So what happens now? Okay, so we've had a wick rather than a body close, so we can move our ranges over, and straight away, let's just move this to here. We can assume we've had NFT to the upside because it's a wick and not a body close, so we can sell from here. Drop back down to the 15-minute. Outside of session now. We've had another candle close there at 10 a.m. If you remember, it's only one candle close so far. So this, if you remember when we come back to an unconfirmed NFT, it was classed as an NFT initially because we had a wick, but then prices went higher. And now it's back to unconfirmed because we need two bullish candles above here for follow through, or a bearish candle next, like that. So we've now confirmed NFT again. So we're looking for sells. Directional bias is bearish, 15-minute now. So again, we've got Asia to wait for now. This is overnight, so we'll play that forwards. We would be asleep, or most of you would be right now. Okay, now let's plot on our 15-minute. So we'll start over here. This is where it was. Drag this over, only comes lower during Asia. Drag this over. Recent fractal here. Now we're looking for sells in premium. Let's just mark our premium so we know where it is. London. Let's move our 15-minute range down. We've also got a fractal high as well produced. Can we sweep the range highs, which is ideal for us? Yes. So we've swept the range highs here. So we can place a sell stop below the entire candle, including the wicks. We can give ourselves some breathing space on here. I'm going to give it a 10 pip stop loss on here. We've got a nice protection area. Again, it's personal preference for stop loss placement. And again, you will get this from your own testing. 3 to 1. Let's play that forwards. Price immediately takes us into the trade with a sell stop. And eventually hits TP. Nice. So dragging price down. Move this out of the way. We're waiting for New York, but we are now in discount. So as price is trading lower, it's unlikely to come back into premium now that day to give us New York. Let's play that forwards. Yeah, outside of kill zone, the day is done and we're in discount. So let's move up to the 4 hour now. So we are 6% up right now, which is nice. So far 100% strike rate. We know that's not always going to be the case. So we wait for a high or low to be breached. Highs are breached. Or low formed. Move our premium versus discount range. And because we closed with a wick, we can assume we have NFT to the upside, meaning directional bias is bearish. Let's move this up to our EQ. Drop down to the 15-minute. Where are we? So we're going to wait for Asia to play out. This is overnight. See if the 4 hour changes, or are we still within this? By London. So we're still contained. Actually, we've just wicked it. If we look at this, drop back to the 4 hour. If you remember, this is where price just wicks that fractal. So we move our range over. It also creates a higher fractal low. So it's still NFT. 15 minutes, go back to 15 minute. What time is this? London opens. Let's add our 15-minute range on. So this is where it wicked the highs, so that's obviously the highest point. Now we'll drag this down. London's finished. Let's wait to see if we get something happen during New York. Price pushes lower, drag this down to the most recent fractal high. This could be a similar story in terms of wicking a range high. Now we want to be trading in premium. Directional bias is short. What we have here is a 15-minute range sweep. So we're going to stick a sell stop in here. Pips to the candle. Let's give it a few pips breathing space. Let's go 12 and a 3-to-1. Can we get that to the lows? Which isn't a rule, but it's ideal, and we can. And if it does trades higher, then it doesn't take us into the trade. Takes us in and drops lower. Nice entry again there following directional bias. So we're 3 trades up, 9% up. Still 100% strike rate. We know there's going to be a loss around the corner, but that's just expenses, right? We don't really care about losses. Our strike rate only needs to be above 33% when we're targeting 1 to 3. So yeah, there's some examples anyway. I could keep going, but it'd be quite a long video. Ideally, what you want to do is go and watch Tom's backtesting video, which covers EU for a whole month, and also go and do your own backtesting. Once you've done that, and if you have any questions, which I'm sure you do, the first thing I want you to do is to go to the frequently asked questions channel in Discord, just to see if your answers are already in there, because we do get the same questions commonly because this is very mechanical. If you can't find your answer, if you're really scratching your head about something, then feel free to use the relevant questions channels or come to me, Tom, or Callum in DMs, and we'll get back to you.